Hello and welcome. This is your Stock Watch on BloombergQuint. Today we talk about three stocks which are in the news or are going to be, and we talk about them with our expert who today is Avinash Gorakshakar, Director of Research at Profit Mart. Avinash, good morning. Thanks for joining in. Before I go back to Avinash, let me address the first stock that we want to talk about, and that's L&T, that's Larsen and Toubro. We had earnings there. We've seen revenues well up around 2.2%. Profit, on the other hand, declined 6.5%. There has been a 5% uptick when it comes to its order inflow for the quarter gone by, which stands at a little over 57,000 odd crores, and its total consolidated order book stands at a little over 3 lakh crores. Now, that consolidated order book is also up only 4% year on year. Taking all these factors into consideration, Avinash, let me bring you in. What's your view on Larsen and Toubro at this point in time, the prospects of the company, as well as the valuations at which it's currently trading at?
Good morning, Agam. I think clearly Larsen and Toubro numbers were in line with expectations, but I think what was disappointing was that the infrastructure segment continues to show negative growth. And in fact, the order book inflow of 5% is not something which could excite the market significantly in the very near term. In fact, from the management commentary, it was very clear that the first half of FY21 is going to be extremely challenging, and the market as well as the management is hoping that possibly the second half could see some revival in the infrastructure sector. So I would believe that valuations have definitely come off from the peak levels, but to expect any re-rating in the near term would be a little too optimistic, and I think the stock could possibly react mildly negative today, considering the fact that incremental order book inflow is going to be now difficult. They have a large 15% exposure to the Middle East markets, and with crude prices coming off, I think there could be some cash flow issues coming in out from there also. So overall, not a very good set of numbers, but I think markets could possibly give it a kind of a market performer kind of rating. Not significant upside seen in the next 6 to 12 months. So I think investors should prefer to hold on, and I would believe that hopefully when the lockdown gets normalized, we could see some sort of normalcy only from the second half of FY21 onwards.
Okay, so FY20, the 21, that's what we want to keep an eye on. But let's move on and talk about Tata Motors. Now, the focus here is Jaguar Land Rover because it's managed to secure about $5 million worth of loans from Chinese banks. It's also indicated that JLR has told its suppliers that while its site at Castle Bromwich may not resume production until August 10th, its site at Halewood, which manufactures SUVs, will begin production today, that is June 8th. Again, Avinash, we've seen a lot of traction of late when it comes to motors. What's the way forward for this one? Because this one has clearly been one which has lagged the rest of the automotive sector, which has anyways had its own set of challenges of late.
No, I think Agam, this news flow is definitely sentimentally positive. Clearly, Jaguar sales, in the Chinese markets are a significant portion of their revenue. But I think what the markets would like to see, and most of the analyst community would like to see, is what is the kind of impact on their operating cash flows. The cash flow generation for this company has been extremely weak. In fact, in the earlier con calls, the management has mentioned that free cash flow is not going to happen at least for the next 12 to 18 months. So I think it's going to be a tough time for Tata Motors, considering the fact that they have a large debt on the balance sheet. And I think in times of downturn, this debt is definitely going to bring down their performance significantly as compared to other players like a Maruti Suzuki or a Mahindra and Mahindra, which are very well placed as far as their leverage is concerned. So I would believe that yes, in the near term, the stock has reacted positively to this news flow, but to expect some sort of significant re-rating from these levels would be very, very optimistic. So I think it would be at least 2 to 3 quarters away before one could see some operational numbers improving, and obviously as global markets open up, we could see some re-rating happening post September, October. But till that time, I think it would be a market performer, and I think investors should take note of the fact.
Okay. All right, then let's talk about the final stock, and that's Titan Company. Earlier on in about April, we had an update from Titan suggesting that the 1 or 2 weeks was terrible for the company because of the lockdown. Very recently, about a couple of weeks ago, once again, we had the company giving us an update on how things are panning out and how gradually they're opening up stores as well as production manufacturing facilities. Today, Titan announces its fourth quarter earnings, and we are not expecting too much considering it's already indicated a decline in its jewelry sales as well as watches. Eyewear doesn't contribute too much, so we won't talk about it as much. But Avinash, your expectations from Titan as well as going forward with the way things are right now. Of course, there's a big slack in discretionary demand. How would you approach Titan right now?
I think Agam, you're right. The fourth quarter earnings are not going to be important, but what is going to be important is the management commentary and the kind of outlook, as far as demand is concerned for the jewelry segment for the next 6 to 12 months. Our sense is that at least for the next 2 quarters, we could not see any significant kind of improvement considering the fact that we still continue to see a lockdown. Discretionary demand has come down significantly. So I think probably after September, October, we could see some sort of normalization and some improvement in the company's jewelry business, which is the main contributor to top line and profitability. But one thing which is important and noteworthy about Titan is that it's a fairly debt-free company, extremely low leverage, so it has the sustainability and the power to withstand this downturn. Our sense is that any decline, Agam, in the stock, if at all, if it does come due to poor numbers or sentiments, should be used by investors to actually accumulate the stock. I would expect a strong bounce back in FY22 when hopefully everything gets normalized. So I think in the near term, challenges would continue to remain, but yes, longer term prospects are positive.
Okay, fair enough. Avinash, so let me conclude by asking about any idea that you picked up in the last 1 week that you may like or dislike for that matter.
In fact, we believe that I think from the pharma space, something like an Ajanta Pharma, which is both a globally as a domestic player, definitely looks quite attractive. Our sense is that after a couple of quarters of underperformance, we could see a decent kind of traction both on the global as well as on the domestic side of the business. And I think it's a decent portfolio stock if one were to accumulate it even at these current levels. Our sense is that one could look at a 15 to 20% upside. So I think in these volatile markets, pharma has always been a defensive place. And I think Ajanta Pharma could obviously give a decent risk reward to investors ahead.
So much for joining us and views on the stocks that we're talking about. And on that note, it's a wrap on this stocks to watch. But there's lots more lineup. Stay tuned to BloombergQuint. This muting, unmuting thing